That's interesting. Okay, so you're seeing it picked up by Japanese, Singaporean, South Korean capital primarily. So do these guys
Correct.
do they prefer to invest directly and buy assets directly and then have a management company look after it? Or do they invest as equity with a local sponsor?
It varies. There are some groups in Singapore that want to buy direct, and they want to run it themselves. Some of the larger, funds. But for the most part, they still want to partner with someone local, just because, especially if they don't have a presence, like an office here in the U.S. Especially when that's the case, they want to have a local partner. But some of them do buy direct. Don't get me wrong, but for the most part, they want a partner.
And is it equity or debt or a mix of both?
It's both. Probably equity is more from, equity comes from, like I said, from all three countries I mentioned, Singapore, South Korea, and Japan. They all would do equity for certain deals. South Korea actually is probably bigger on doing debt. Debt, being first mortgage and mezzanine on deals. And South Korea also is, a little bit more focused on development deals.
Is that right?
On the debt side. On the equity side, they would buy existing deals, but on the debt side for South Korea, they really are doing a lot. We're actually doing a lot of deals with them. Where they do, a first mortgage and a mezzanine loan on a construction deal, from a hotel to office to to a multifamily project, and which is good. And the reason why our clients, I wish we can get a mezzanine loan from someone from here, but the rates are a lot cheaper. Than they're more competitive on the mezzanine pricing than a U.S. mezz fund would be. So that's why, a lot of these groups are using South Korean, debt, because it's just, cheaper.